This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
I think people need to learn, just do everything that you can to learn about what things really mean, and then what you're really comfortable with losing. Mostly, you have to set that risk.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. I'm sure anyone listening would agree that Warren Buffett is the world's most successful investor. Now, he's amassed a net worth over $103 billion. So, it's easy to see that would be the case. Now, if you ever want to think like Warren Buffett, you are in for a treat. Now, our next guest is considered to be the world's leading authority on the subject of Warren Buffett's investment methods. Now, her international best-selling investment book that she co-authored, she include many of them, including Buffettology, The Tao of Warren Buffett, The Management Secrets of Warren Buffett and the Art of the Stock Arbitrage, and more recently, The 7 Secrets to Investing Like Warren Buffett. All of these books have just been phenomenal hits. Many of them have been translated into 24 foreign languages, as a matter of fact. Now, additionally, she has shared her incredible knowledge of financial investments on media outlets like Fox, Bloomberg, CNBC, and many others, and has considerable experience and interest in helping people understand how to invest. Now, with all that, I'd like to welcome my good friend, Mary Buffett, to the show. Mary, thanks for coming on.
Oh, thank you for the wonderful interview or the introduction. I'm so happy to be with you and your audience. Really
Great.
Exciting. Yeah.
Excellent. Now, guys, if you like what Mary has to say, you can reach her via her contact page at marybuffett.com. So, okay, Mary, go ahead and tell us just a little bit about your background, about your journey.
My background is very interesting because I was a singer. I was in the music business when I was very young, 14, 15, and really came up in that music business. And I loved business. I always wanted to know where they made the money in the music business. And it was in publishing. And I worked for Hugh Hefner when I was 19. I ran his publishing companies, music publishing companies. And eventually I had a girlfriend, a really good girlfriend, who I did a lot of other things, but she said, you have to meet my brother. He's a musician. And I was like, oh, the last person I want to meet is a musician. And so, but it was Peter Buffett, Warren's son, the youngest son. And at that time, Warren Buffett, nobody knew who he really was, unless you were definitely involved in investing. So Peter and I, we met and married within 3 months. It was one of those fantastic, relationships. And we still have a great relationship. So that was it. And then once I was involved in the family, I understood, because anytime you're around Warren, and we all spent Christmas times we spent a couple of weeks together in Laguna Beach. And that's when Warren and everyone and all of his fabulous friends, Charlie Munger and so on, would be down there. It was just, you couldn't help but learn investing, because that's all he talked about. And it was really about companies and how to invest in companies. So it changed my mind about investing, because investing is, most people think of it as the stock market. Well, they don't realize that the stock market, those are companies, and you have to look at them like that. So, when somebody tells me, oh, there's this great new stock, you invest in it, I really tell people who are in beginning investors, especially, is like, understand what you're investing in. In other words, know the company. Know that it's a company that has a president, that has they have a theory of what they're doing. That's the reason I like to invest in companies that most people know, Johnson & Johnson, Coca-Cola. I'm not telling people to invest in these companies. I'm just saying those are the kinds of companies I can look at, go back, some of them 100 years, but at least 10 years. You want to look at a company and say, has this company's earnings been going up like this over a 10-year period? Not 1 year really high and the next year really low. And, so that's, you kind of want to look for those things. So first, understand what the heck you're buying into, and really investigate it. And you can call the company. You can call the company and you can talk to the president. You'd be surprised how many presidents of companies will get on the phone with an investor, with anybody. So really do your work. Research.
Yeah, it's kind of like buying real estate. It's the same sort of scenario, right? You're buying an asset that that you like it, you love the deal, and it's the same thing. It's not really a flash in the pan, whatever it is you're investing in. I think that for many people, we were talking about this before in the green room, is that they're looking for that get rich quick scenario, right? They're trying to find, what's the latest hot stock tip, that kind of thing, and rush it, and then try to get out later on, and it's like that's not really a safe way to really invest. And I think it also goes against the way that Warren Buffett would actually do it, right?
Yeah, I mean, really, I think I said to you earlier, as stockbrokers, the only way they make money is if you sell stocks or buy stocks. They get their commission. So they're not going to give you a company to buy that you're going to hold on to for 10 years. And over those 10 years, it's going to grow. It's going to, whether or not it gives dividends or doesn't give dividends, you're going to have it grow over a long period of time. So that's how we always look at companies to invest in, is long periods of time. The get rich quick, it doesn't really happen. It happens, but it's not in the kind of investing that we do. We get rich over a long period of time. Yeah.
That's right. And investing in the wise thing. So what would you say then is the crux of Warren Buffett's investment philosophy then? Like if you were to boil it down, what would it be?
Wow. Patience is one of the things, because you have to, honestly, if you look at the history of what he has bought for his company, Berkshire Hathaway, which is the name of the company that he puts all of his stocks in, he may not buy anything in a year. He may buy just one company in a year. Lately, because he has a couple more people working with him, they've probably bought a little bit more than he typically did over the many years that I was in the family. So patience is really, looking at the right company. Once again, it's finding something that some people say, like, I don't know what to invest in. I'm like, look around your house. When I moved here, I noticed that I was using a lot of WD-40. I think everybody knows what that is, right? Mm-hmm. Spraying it. And all of a sudden I looked at the can and I'm like, WD-40. I wonder if it's on the stock market. I never thought of it before.
Right.
It sure enough is. It's just too expensive. I'm waiting. I'm waiting patiently. The price will be right one day, but it's a great company. And so it's like you can think about anything that you use or things that you do or places that you go. Maybe it's McDonald's, those are great places, great things to invest in, things that you know. So that's the main thing about Warren is he buys what he knows.
Yes.
And that's important.
Yeah, absolutely. Absolutely. That's the same thing again with real estate. It's buying assets that you're familiar with, buying in markets that you're familiar with, buying, and it's funny, with this, I told you a little bit about a deal that we're working on right now. And when I spoke to the lender about it, he was like, "Oh, we have to develop a whole pro forma around what we think it's going to do in the future." I'm like, I already know what it's going to do because I have a running history because we already have 600 units in the local market. I kind of already know what the rents should be, what the expenses should be, what the NOI is going to look like. Because again, we have other assets. It makes me a little more comfortable because I understand what I'm getting myself into and what I'm getting all these investors into as well. So, and that's the thing, invest in what you know. Don't speculate. Don't go after the shiny objects, which I find that many folks these days are doing that. And it totally goes against not only what Warren says, but also some of the materials, actually all the materials that you put out there. You put a lot of books out there. I only covered a short list of all the stuff you put out there. But you never talk about that, right? In your stuff.
No. Because over time, there's a reason. I remember when Berkshire Hathaway was $19 a share. It's over $400,000 a share now. People think that's impossible. No, that's what happens when you consistently earn, over 20% for a lot of years, as Warren did, by buying the right companies and holding on to them and making that's how he made that kind of money. And understanding, he doesn't, like I said, he doesn't buy what he doesn't understand. So that's the reason, one of the reasons people used to say, oh, he doesn't buy technology because he doesn't understand it. Well, actually, I wrote a great piece. I should publish it on my website. It's called Apple and Why. And it was why he bought Apple. He knew when Apple and all of these stocks came out that this was going to be the future. But he didn't know which one of those companies was going to have the great fundamentals that as investors we like to look for, low debt, lots of earnings, consistent earnings, great management, all of those things that are really important.
Yes. I think the one thing Apple has done better than other tech companies is that they turned it into like a lifestyle brand where once people get pulled into the ecosystem, it's not like a typical tech company. And my background is tech. It's more like you're buying into a lifestyle, into a brand itself, right? It's very different,
It's Coca-Cola and Pepsi.
Yeah, exactly.
Right. It's just like that. It's like either you love Coke or you love Pepsi, but you don't love them both.
That's right. You're either on one side or the other side. That's right. Yeah. That's right. The one thing I noticed about your books is that you like investing could be somewhat complex for most times, right? And the one thing that you've done is you've broken it down and made it very simple. Now, what's your take on how you've done that? Like, how did you know to do that, to really break it down so people understand how this stuff works? I find that for many folks out there, maybe some are even listening right now, one of the reasons why they don't take action is because they're just afraid. And maybe checking out some of your materials might actually fix that. What's your take on that?
My take on that is education. It's that you have to educate yourself in terms of the language of investing. It's really interesting. Like I can say to you, oh, the PE ratio, which is price over earnings. But even then, price, earnings, but you don't really know what it means in relationship to a company or to a stock. So the understanding of the language of investing is really important. So I like to break things down to the point where anyone can kind of understand what you're supposed to be looking for. Because that's what I had to do, because I didn't go to college. I wasn't into finance. I was into music business. So it was totally different. But that's what I think. I think people need to learn, just do everything that you can to learn about what things really mean, and then what you're really comfortable with losing. Mostly, you have to set that risk of like, look, I'm willing to lose. It's like, I hate gambling. So if I go to Las Vegas, I'm the worst person. But I always will. I'm willing to lose $200. Okay. I know that doesn't sound like a lot because I work too hard for my money. So, but I will take $200, and sometimes I will play a long time with it, and other times when I lose it, I'm out. So you have to set your boundaries. So, set a certain amount as an investor that you can invest. Try and invest, or at least look at investing after you've learned about it. Try and invest frequently. In other words, as the price of the stocks and the companies that you like are going down, invest then. You don't have to invest every month, but I'm saying watch your companies that you like. I just was thinking the other day, looking at something, and someone mentioned Johnson & Johnson. And I'm like, well, there's a great company, been around forever. It's not going to go away no matter what. But there were times when it got hit, like years ago, when I think somebody put poison in Tylenol or something, that the stock just completely crashed. And, I remember being with Warren, and we were watching the television, and he at that time owned a lot of tobacco companies, Philip Morris, so on and so forth. And it was on television that they were going to be putting it on the packages, cancer. And I looked at him and I said, wow, I bet that's really bad. And he said, are you kidding? This is going to drive the stock price down, and I'm just going to buy as much as I can. He eventually, I think, got out of those stocks. Like, I don't own any of those stocks because I have children. So I try to not own stocks that are bad for the world or the health of people. But that's a good example, so.
Yeah, I remember that when that happened, the whole Tylenol thing. I think that the difference that Tylenol did versus what Ford did with the Pinto, so Ford had a very similar PR fiasco where cars were blowing up. I don't know if you remember that. Like they were getting rear-ended, they would just blow up, and then Ford tried to cover it up. Yeah, and it was actually true. Where Tylenol, they fessed up, they took care of it, but two very different run companies. One did it very, very badly, and it took them a long time to recover, meaning Ford. And Tylenol, I don't know, was it Johnson & Johnson? I forget who owns it. Maybe it is Johnson & Johnson. I don't remember. But yeah, they ran that company properly. They fessed up. They took care of it. They cleaned. They helped the families, and then they brought it back to life. And I think that takes some insight to know that. I think that maybe that's the reason why Warren was invested with him in the first place, because he knew the management team would not fail.
Yeah, and that's another, you mentioned that, and that's a great thing is, whoever's running the company is really important. Just because it's a giant company with a name that, kind of is its own name. There's somebody running it, and you have to know who those people are. And that's why you want to get their reports, their annual reports, and read what they're going to be thinking about doing, what they are doing, because those things, they matter. Management matters, especially to Warren. I mean, it really makes, it can make or break a company.
Yep, absolutely, absolutely. And I know that Warren is also really big on establishing habits. I know he's big on habits, right? What would you say is probably one of the most, I guess, one of the best habits that really helps solidify his success, if any, if there's only one?
Reading. Reading. He's constantly reading something. And I mean, whether that's the newspaper or whether it's a report on a company, he's just constantly learning. And his partner, Charlie Munger, is famous for saying, I like to go to sleep a little bit smarter than when I wake up.
Yes. He also has, he also says assiduity. Yeah. The best way to learn something is you have to put your ass in the chair. I think he also says that. That's another Charlie Munger thing.
Yeah. So being around the two of them, Warren first, and then of course Charlie for so many years, was an incredible. You couldn't not learn, and someone like me. And then Warren, really loved, because none of the other kids of his really went into his business or were interested in it. But I was just a businesswoman, so he always, appreciated that, I think. So I got the best of the information. Yeah.
Yes. Well, as a matter of fact, I know that your ex-husband, he was in a group, Comet 9. I think that was in the 90s, right?
I think so. Yeah.
Yeah. I had that CD, by the way. I didn't realize it was his son. It was pretty funny that would be a thing.
Yeah. That was after we were divorced. Yeah.
Oh, okay. Yeah. Wow. Well, good. Well, we covered so much today, and I appreciate you coming out and speaking to the audience here. So tell me, if you had one piece of bulletproof advice for the audience, what would you tell them?
I think I would say, be patient and learn about what investing really means. So learn the language of investing and read, learning. Yes, reading. And don't read books that you don't understand. There's plenty of investment books that people have given to me, and I start to read them and I'm like, this is so hard to understand that I just don't read it. Read things that are easy to understand. And a lot of my books I make really easy to understand. Yes. So I think that's it. Be patient, know what you're buying because it's your money. And then, don't want to make money overnight. Nobody makes money overnight. Warren's taken him 50 years to be as rich as he is. So the long term, go for the long term.
Go for the long term. Always go for the long term. Yes.
Yeah.
Totally agree. All right, guys. Well, if you want to reach out to Mary, you can reach her via her website at marybuffett.com. She's got a lot of great material out there too. She has her university. Definitely check that out. Okay, there's a lot of great materials there, as I mentioned, and her books. Check out her materials. She writes her books in a way that makes it very easy for people to understand and really learn that the language of real estate, and whether it's stocks, bonds, Bitcoin, whatever. If you don't know the language, you're going to have a hard time building some success. So you have to really do that and learn the language to be successful in this business. Okay. Thanks for tuning in, guys. And I will see you in the next episode. Take care.
Thank you so much.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.